something you may not remember about Jonathan Twombly, if you haven't been with us for a year or so, is he built a portfolio of $25 million in multifamily, doubled everyone's money, got out early because he saw some craziness going on. He's currently getting ready to do some more digging. And most importantly, he has switched to hotels because there is a lot of opportunity in boutique hotels. So again, that is why Jonathan is part of the Millionaire Series, comes back every week to talk to you. Jonathan, thank you so much.
Yeah, absolutely. Thanks for that introduction. I do want to let everybody know that I have not given up on multifamily. Still involved in that. I mean, we're actually partners in about 2,400 units with other people who are the lead sponsors. And at some point we'll be getting back into our own deals as well. But I've just really I spotted this opportunity in boutique hotels, which I'm really excited about, and actually for some of the same reasons that I was excited about multifamily when I first started, before it got to be such a frothy, overbought, asset class. But
we will talk about boutique hotels in episode 2, and we will just talk about the nuttiness and the overhang that is coming to multifamily, because we thought it was going to be bad. I think it's going to be worse. And that will be episode number 3. But Jonathan, episode number 1, we got to talk about jobs. The ADP report today was a barn burner that is going to impact rates. The Fed's talking about going higher for longer, maybe 2 more rate increases. At some point, something has to break, whether it's the economy or banks or, whatever. But what do you see going on right now? It's wild out there, I think.
Well, yeah, I mean, just that jobs report was insane. I mean, doubling expectations. I mean, it's so big that you got to wonder if there's not some kind of glitch in the data, right? No, I mean, honestly, there could be some kind of glitch that kind of has thrown off the number, and it's going to get revised downwards, because that does happen sometimes, right? But it's such a huge number. Yeah, the thing I'm interested in is, did they go back and revise, previous numbers, or is this just?
I did not check that.
Yeah,
I did not check that.
But I mean, this is clearly, the Fed is basically looking at one number right now. They're looking at that employment number, and they're waiting to see employment crack to tell them now it's time.
Yeah, we've gone far enough.
Hiking. Yeah. And when you get numbers like this, it's clear that it hasn't cracked, right? And if anything, the economy is just even more on fire. I mean, I'm surprised, frankly, and I mean, this is good news. Who doesn't want more jobs and wage growth? It's great for the economy, especially if you're in real estate. It does, however, mean though that interest rates are going to continue to go up, and that is going to have a negative impact on a lot of people, real estate and otherwise, right? And definitely some of the cracks there are starting to show. And anybody who is based their business model on cheap money is in a world of hurt right now. So and there's no rescue in sight. I think what those people are probably rooting for is a big crash, so that
that's the only saving grace they have. They have to bet on a crash.
Like a big crash, because I also think that I think the Fed is not going to lower rates by very much in a recession, right? I think they will, because they learned their mistake about super low interest rates. They don't want to go back there and blow up yet another bubble, after they blew up several bubbles in a row, right? They don't want to do that again, because I think that sanity has returned to the Fed. But they know that they will have to give some lip service, right, to if a recession happens. But I think they're going to keep those cuts pretty modest unless there is a real crash. I think they will be willing to put up with kind of sluggishness for a while, right? As long as the unemployment picture doesn't get out of hand. If we just have middling growth for a while, but inflation is low, and there's mild recessions, and we're kind of have low growth, I think the Fed will just keep rates where they are. They're not going to try to juice the economy by going back to super low rates. And so anybody who's kind of waiting around for rates to decline, I think it's just really
let's just talk about how crazy the ADP report was, because I think there's some telling things inside the numbers. So first off, you're absolutely right. And I just want to go back and last month was 267. Expectations were for 220. So the experts, the smart money, thought the economy was slowing down by 20%, right? 267 to 220, roughly 20%. It came in at 497, so more than a double on the beat. Just leisure and hospitalities, aka services, 232,000 jobs added. So a beat all by itself. Construction, 97,000. We are seeing builders build more because they are having the ability to sell. Where did we lose? Manufacturing. 40,000, 42,000 jobs lost in manufacturing. So I think what we're seeing now is what you and I talked about 6 months ago. We've stopped buying stuff, right? We're not buying RVs and motorcycles and Amazon crap. We're doing services. We're going to hotels. We're taking vacations. We're going out to eat. So I think we're seeing a services economy flex our muscle. And then finally, I think this is the third month in a row. It might be the fourth. We've actually had real wage growth, not just nominal wage growth. We've had nominal wage growth for years, but real wage growth has only started in 2023. And I think it was March. It might've been April. So again, wages were up 6.4% in this report. If you take CPI at 4%, you still have real wage growth of 2.4%, which again, net, good for landlords, right? Yeah. If housing affordability stretches further out because nobody can afford these mortgages, there's just more people that have to rent. Isn't that how it works?
Yeah, I mean, pretty much, right? Or they double up, right? So, which can also happen. But I mean, occupancy is still very high at multifamily properties. Rent growth has definitely tapered off, but it has returned. Like last year, there was a lot of rent declines because things, or earlier in the year, I should say, because things went up so much in the last couple of years during COVID. But then it fell back to earth, and you had a lot of declines. Now you've got rent growth starting again, more modestly, but it's the trend is in the right direction. And it probably has a lot to do with the fact that wages are going up, right? So people can afford to pay more. Yeah. It's interesting about the manufacturing. I mean, that clearly, I think, first of all, that probably all the demand for RVs and that sort of thing, these big ticket items, like people bought all that stuff during COVID. They don't need that stuff anymore. Plus, with interest rates going up, I mean, everybody's financing those big ticket items, right?
Oh,
so
yeah,
that makes them, so there's like a double whammy there, which I can see why those jobs have gone away. Also hospitality is very seasonal. So right now you're in the hiring season for hospitality, and everybody's on summer vacation. So they're all going to hotels, and all, those places are hiring all their summer people. So that probably sort of distorts the numbers a bit, although the economists should have taken that into account, right? They should have known.
You would think these are the experts after all.
Yeah.
They're just not very good.
Well, predicting the future is always hard, right? So
yeah, come on. We do it on this channel all the time, and we're certainly right more than wrong. But this one we would have been wrong about for sure. 497. Oof.
Yeah.
I would not have picked that number.
No, not at all.
No.
I mean,
but if you play this forward, this just means, again, rates have to go up. People are going to believe Powell higher for longer. We're going to believe the Fed that, maybe 2 more rate increases. It just feels more and more likely that and I say it's them really.
Yeah.
They're going to take this until something breaks. Will it be jobs? Will it be the economy? Will it be banking? Will it be fine? I don't know.
I mean, I think it's, like I said before, they're looking at the jobs number primarily, right? And so as long as those numbers continue to be strong, they're going to either raise rates or hold the line. I mean, it's interesting too, that now, so we've got rates basically have, for the first time in a long time, it costs money to borrow money, right? Yeah. There's actually positive real interest rates now.
Correct.
Which is the first time that we've had that for a decade. I mean, we have an entire generation of investors who have never seen a real interest rate before. It's always been real negative interest rates, right? So basically the interest rate has been lower than inflation, right? In real terms. So now you're talking about an actual positive interest rate, and that is something people haven't seen. I mean, it's been the nature of the world for most of our lives, but in the last 10 years, it became, something that people didn't see, and they expected to last forever. Right. So that's causing a lot of dislocation, when you're borrowing, when your whole sort of strategy depends on borrowing money that's effectively free, you know, you borrow a lot of money. And you pay
Yeah,
up the
and
price of everything.
we have some huge sins to pay for. We're going to talk about that a bunch in episode number 3.
Yeah.
There's apparently $1 trillion in multifamily refinances coming up, and I would tell LPs to get ready for something called cash in refis. It could be pretty bad out there. But yeah, it's there's more pain coming. There's more pain coming. Jonathan,
Yeah.
you put out a great Facebook group. What is it so people can go check it out and come from one rental at a time?
Yeah, it's called Apartment Investors Club. So please just look for us on Facebook and fill out the questions when you get there. Let me know that you're from ORAT. So I love welcoming people from the community, from this podcast, into the community. So please stop on by.
There you go, folks. And we're going to talk about why Jonathan is so happy about boutique hotels next, and why he's excited about this, just like he was multifamily when he built his $25 million portfolio. Can't wait, Jonathan. Thank you so much.
Thank you.